How's it going, YouTube? Hope you've all been doing well. I know it's been a little while since I've posted any content. I've been taking a brief break. Some of it was due to work, and then just due to the natural disasters. We got hit by a couple hurricanes, and um, our office got flooded. So just been dealing with cleanup and haven't really had the time throughout the day to take trades. Nonetheless, I was able to get back in the saddle, so to speak, today and take two trades on two bullish fishing hook chart patterns. And they were both profitable trades on SPY's 1 minute chart. So I want to go over both of those, my entries, my exits, the indicators, the whole 9 yards. So you've seen me trade this pattern before. It is becoming one of my favorite chart patterns, where earlier in the year we were trading more descending, broadening wedges, falling wedges. Lately, it's been sharp momentum swings up and down. So playing bullish and bearish fishing hook chart patterns. All right. The first one here, this is the 1 minute chart on SPY. And you can see this is the pre-market data. This is once we go live here where it gets dark blue. So at the open, we fail to go above the 200 EMA. We get this sharp flush down. I was looking, we started bouncing around 578.4. My levels I was watching was 578 and then 577.5. However, the market decided to bounce prior to that, and I was able to still capture this move, and I'll show you why. So we started to get this rounding bottom here that formed the fishing hook chart pattern. So first thing, we got a potential bullish chart pattern forming. Now for me, I need to have indicators agreeing with the price action, agreeing with the chart pattern for me to decide to take an entry. It's got to have Confluence to be an A plus setup, right? So from the RSI, I seen that we are down in the oversold range. Anything below this dotted line, the 30 level of the RSI, is considered oversold. Thus, typically, whatever stock you're watching, buyers are more likely to step in and drive the price back up from that, from whatever that price is at that point in time. All right. Then on the MACD, I like to see the highest probability for these bullish buy signal crosses is when they happen in the bottom zone. You wouldn't want to see it up here. You want to see your bearish crosses in the upper zone of the MACD. So we had the potential for this bullish cross. The blue was below the orange, and it was starting to round out. Okay, similar to the chart pattern, you get that rounded bottom. And then the same thing from the TTM. These orange bars indicating that selling momentum had control. And you're only going to see these go so far, and then you'll get that rounding, and you'll start to see red bars for buying momentum. So typically, I like to see that first red bar for buying momentum re-enter in the market, and then confluence from my other indicators and the chart. And that's how I take my positions when going long. I like these three indicators to agree with one another. All right. So that's exactly what I did. I waited for you. Typically on these, when this bottom starts forming, you want to take an entry on the first green candle that closes above the last red candle. So this would have been your resist. This would have been the level you're watching. This green candle didn't close above this candle's open. This one did. So I entered here. And then anytime you enter a trade, you already want to know, you want to have that predetermined exit, right? Where are you going to get out? You also want to have a stop loss. Where are you going to get out if the trade starts going against you? But nonetheless, where was I going to take my profits? So I chose this level up here. We had pre-market resistance and then opening data rejected there again. So there's a nice zone across here, right? Along the way, you're still asking yourself, is it going to get there? So I'm looking back at these levels. You got some resistance here, crossed here. But we went up, kept closing green, closed above this EMA, nice bullish pin bar, testing the second EMA, closed above it and just kept rising. We never really pulled back until after I got out of the trade. So again, as price got close, I don't always want it to go back to the top of the resistance level, because then you're going to get stuck in a potential pullback which we got right here shortly after. So if I would have held waiting for a break above that range, I would have got stuck and probably, you know, took less profits on this pullback. So I was able to capture a 20% return for $100. I only used $500 on that trade, so that's your $100 return. And this is the 1 minute chart, so that was a 5 minute trade for $100. All right, let's look at the second bullish fishing hook chart pattern. This one took a little bit longer to play out, nonetheless, the same result. All right, so as price fails to break above this resistance level, we get a sharp sell off again to the downside. Also, you can note right across here, what did we do? We fell and we reversed back to the upside. So not only did we have a potential fishing hook chart pattern forming, we were in a or near a support level, right? Also, purple EMA, that's the 200. When that's above, like it was in the first scenario, you treat it as resistance and you want to look to get out when headed up to it. And then when price is falling to it, you want to look for that EMA to be support. So we had several reasons to go long here. Support level, 200 EMA being held, potential fishing hook, bullish reversal chart pattern, and then let's look at the indicators again. All right, as price was rounding out up there, the RSI was down in that at that 30 level, the oversold range of the RSI. You get that blue starting to curl and it's down in the bottom zone. Again, you don't want to see bullish crosses up here. You look for this bearish one that took place, and then when the MACD is down here in the bottom zone, you look for the bullish cross. That's when it's the highest probability. There was one that took place over here, but that's not high probability. The RSI wasn't all the way down to the oversold. It's not a trade that I would have taken back over there, and there may not have even been a chart pattern on the chart. So oversold, buy signal MACD cross setting up, and then the same thing. Sellers can only take control for so long. This started to round out. Buying momentum stepped in, and then it took control. I was able to hold for the buying momentum on this setup. So again, 1 minute chart. You want the first green candle that closes above the last red candle. Well, the last red candle's body was down here, so this one closed above it. This is where I took my position. And then again, where am I going to get out? We got resistance once, twice, failed to close above, and a third time. So this was a strong resistance level. As price reclaimed that zone, I got out. And again, you see I exited at the bottom of this resistance zone because there's a chance that it could have got up here to the top and then a sharp rejection. So you want to go ahead and lock in profits. And this one was for a 30% return, a little bit longer, 14 minutes, but a little bit more return. I used about the same position size on this one, roughly $500. So that was a $178 in profit trade. Hope both of these examples were helpful. Sometimes I rush through these things and don't elaborate on something enough for you. So if you have any questions, always feel free to drop them in the comment section below or personal message me on my socials, my Instagram at TK Trades, and I will definitely try to get back to you as quick as possible. See y'all on the next video.